Today's intelligent investor reading of the day comes from page 13. Thus it seems that any intelligent person with a good head for figures should have a veritable picnic in Wall Street, betting off other people's foolishness. So it seems, but somehow it doesn't work out that simple. Buying a neglected and undervalued issue for profit generally proves protracted and patience-trying experience. And selling short a too popular and therefore overvalued issue is apt to be a test not only for one's courage and stamina, but also the depths of one's pocketbook. The principle is sound, and its usefulness application is not impossible, but it is distinctly not an easy art to master. And this is one way right here that you can become very profitable on Wall Street. In the market right now, Amazon was selling at 170. We could take Tesla was selling at 400, which I thought was insanely overvalued for both of them. But now Tesla was just down to 103. It's about at 120 something. I'm hoping it comes back down to 103. Amazon today is at 95. It was as low as 81, which I presented as I believe that was good value. I mean, I'm buying it down over 50% from where the price that it was at. So I know it's really hard when Tesla was at 400 to go in and believe that you're going to short Tesla or believe the stock is just running up. But that's how you lose money on Wall Street, is by buying the popular issues when they're popular. And now that Tesla is unpopular, since Musk purchased Twitter, the stock and then the stock has been down, and they had to cut some prices on Tesla, so that on the cars themselves, so that brought it down. I'll be doing a video really soon on why I believe that Tesla is at a good value right now. But that's how you can make money on Wall Street. But Graham says it here. But it is distinctly not an easy art to master. And the reason why is because when something is going down, we believe that it may keep going down, and we're risk averse. We don't want to lose money, so we're risk averse. So instead of buying, we when the stock is down, sometimes we even tend to sell. I know throughout my time, especially in the beginning of investing, I would purchase something, and I would hold on to it, and if it went down, I there's times that I sold it, and it's like I think the street is watching me. As soon as I sold it, it immediately turned around and went back up. But if you keep, in one of my videos I said earlier, if you buy stocks as if you're buying a piece of business, you're going to always want to buy that business cheaper. I own Dairy Queens. Dairy Queens cost about $1.7 million to build. But I could find one that someone purchased and just built, and because the market was telling me, somehow the market was telling me that a Dairy Queen could go for $1 million, but I know the value of a well-performing Dairy Queen, is probably worth $2 million. Of course I'm going to buy it at $1 million. So that's the same way you should look at Amazon, or you should, Amazon stock, or any stock that you're purchasing. Look as if you're buying a whole business, and your whole thought process will be totally different.